Hi everyone. In our previous classes we have discussed on the topic ratio analysis. So in this class we shall discuss on the topic called cash flow statement. Cash flow statement. What does cash flow statement means? Let us go by the term cash flow statement. What does cash means? Cash means money, hard cash. What does flow means? It is flowing. Either it is an inflow or it is an outflow. A recording of cash either in inflow or outflow in a statement format is called as a cash flow statement. Now if you go the meaning over here, it is provided that the cash flow statement provides information about cash receipts. Cash receipts are nothing but cash inflow. Uses of cash. Uses of cash is nothing but outflow of the cash. It is recorded for a particular period of time. Let us say it is for a 1 year of time. Recording of inflow and outflow of the cash for 1 year of time is called as a cash flow statement. The inflow and the outflow are reported in these three activities, that is operating activities, investing activities and in financing activities. These are the three activities in which cash has been inflow as well as outflow. What are these activities we'll be learning in the next slide. Cash inflow and the outflow. How does cash inflow and outflow happens in these three activities? If you check about operating activities, when the cash receipts, that is the revenues, exceeds over the cash expenditure, that is expenses, that is the revenues are more than the expenses, then it is called as an inflow of the cash. If the expenditures, that is the expenses, are more than the revenues, in that case outflow of the cash will be possible. This is for operating activities. When it comes to investing activities, when the sale of property, plant and equipment has been happened, or a sale of debt or equity securities of other entities. Let me make it clear, debt or equity securities of other entities. Here if our company is of XYZ company and we have an investment in ABC company, and here we are speaking about selling of debt or equity securities of the ABC company, not of our own company. That is what here investing activities means. The third is collection of loans to other entities. It is we are collecting loans from other entities. This is what an inflow from the investing activities is. What about outflow of investing activities? How can cash be outflown from investing activities? By the means of purchasing property, plant and equipment will lead to cash outflow. If we are purchasing debt and equity securities of other entities, again I will take the same example. Our company is XYZ company and we are acquiring debt or equity of ABC company. In this situation, the cash will be outflown from our companies. That is why we call as cash outflow in investing activities. And if you are granting loan to other entities, even in this situation, the cash will be outflown. So that is why we call it as inflow and outflow of these investing activities. Now coming to financing activities, if we are issuing the securities, if we are issuing the debt or securities, in this situation, the inflow of the cash will be happen. That is, cash will come into the organization or come into the company. Or else if we are paying dividends, or else we are redeeming the debentures, or we are reacquisition of capital stock is happening, that is we are buying back the equity shares, or else if we are redeeming the preference shares, in these situations outflow of the cash will be happening. So this is the combination of operating, investing and financing activities wherein cash inflow and outflow will be done. So I think this concept is clear. So let's jump to the next topic, that is distinction between cash flow statement and fund flow statement. Now if you say the basis of difference is given and the difference between cash flow and fund flow is given. The first basic difference is basis of accounting. In basis of accounting, this difference is made. That is, cash flow, it recognizes cash basis of accounting. That is, purely cash basis it is accounted, not about fund basis. When the cash has been received, only in that situation those transactions are recorded. In fund flow statement, it is based upon accrual basis of accounting, that is working capital. Once the accrual has been happened, then we can record into it fund flow statement, whether the cash is received or not. That is secondary thing. On accrual basis, we record the statements in fund flow statement. Next, second basis of difference is on the basis of significance. Cash flow is useful for short-term financial planning, but whereas fund flow statements are used for long-term financial planning. The next difference is difference on the basis of schedule of changes in working capital. In cash flow statement, We do not prepare a statement showing scheduled changes in working capital. We don't prepare that. But for one flow statement, we do prepare a schedule of changes in working capital separately. The next is causes of variation. The causes of variation for cash flow statement is it studies only the cause of cash variation. That is, it studies only purely for cash variation. Fund flow statement, it studies causes for changes in working capital. It focuses on the whole changes in working capital. So these were the difference related to the cash flow and fund flow statements. Now, how does preparing a statement of cash flow statement is? The order for preparation is, first we consider operating activities. On the second point we consider investing activities. On the third point we are considering financing activities. So for preparing this cash flow statement, from which sources we can collect the information? So there are three sources from which information can be collected. The first source is comparative balance sheets. From the comparative balance sheets, we receive the information for preparing cash flow statement. The second information is from the current income statement, or else on the basis of additional information also we can prepare the cash flow statement. As we discussed, there are three stages in this: operating activities, investing activities, financing activities. So we may expect 5 marks individual problems on operating activities, investing activities and financing activities. But for a 15 marks problem, we have to club all these three into one side. That is operating activities first, second investing activities, third financing activities. So before solving one 15 marks problem, let us solve 5 marks problems on each of these activities. First, let us start with the operating activities. This is the format of the operating activities, that is cash flow from operating activities. So this part is important. Whenever we are preparing the cash flow statement, the heading is important, that is cash flow from operating activities, indirect method as per accounting standard 3. There are two methods to prepare. One is direct method, another is indirect method. Most of us, we commonly follow indirect method. And even in the examinations, if you go through the previous year question papers, most of the questions have come on indirect method. So let us solve problem on indirect methods first. So the format says particulars, inner column and outer column. First we have to consider here net profit before tax. The amount will be written in the outer column. Then we have to add adjustments for non-cash items. Here we are adjusting non-cash items as well as non-operating expenses over here. So if you take an example, it may be either depreciation, it might be dividend paid, or it might be transferred to general reserves, or it might be provisions for taxation, depending on non-operating expenses and non-cash items. So once if we have added all these, from this we have to subtract non-operating incomes. That is profit on sale of fixed assets or else dividend receipts. All such items have to be deducted from this net profit. So after deducting this, we will be obtaining operating profit before working capital changes. So this is the answer what we obtain. After obtaining this, we have to adjust the adjustments for changes in current assets and current liabilities. So the adjustment is this: we have to add decrease in current assets and increase in current liabilities. If in the question, if in the balance sheet we have current assets and current liabilities, and if the current assets value are decreased, then we have to add. If the current assets value are increased, then we have to subtract. If the current liabilities value are increased, we have to add. And if the current liabilities value are decreased, then we have to subtract. So from this adjustment, we will be getting cash generated from operations. So once when we get cash generated from operations, we have to subtract income tax paid. And the balance remaining is called as net cash flow from operating activities. So one adjustment related to current assets over here is, listen it carefully, in cash flow statement we consider all current assets but except cash in hand and cash at bank. We do not include these two items, that is cash in hand and cash at a bank, in these current assets. But instead of this, what we will do at the end of the solution, in the 15 marks problem, at the end of the solution, when we get net increase or net decrease in cash, to that we add opening cash and cash at bank balances, and after adding to that we will get closing cash balances. That I will show you in the 15 marks problem. But as of now, keep this in mind. We do not include cash in hand and cash at the bank as current assets in this operating activities. That we will consider at the end of the problem. So now let us solve one 5 marks problem on this operating activities. So this is the question. Net profit of Shiva Limited for the year ending 31st December 2012 was 1,60,000. Compute the cash flow from operating activities. Here we have 2 years data as well as certain items. Now let us classify what are these items. Bills receivable. Bills receivable are treated as current assets. Prepaid expenses, again this is treated as current asset. Stock, again this is treated as current asset. Outstanding income, again this is treated as current asset. Sundry debtors, again this is treated as current assets. Now what is the treatment for current assets in operating activities? That is, let us check. If the current assets value are decreased, then we have to add it. And if the current assets value are increasing, then we have to subtract it. Next point mentioned over is depreciation. Depreciation and dividend payable are treated as non-cash or non-operating expenses. Even these two things have to be added back to the net profit. If you check in this slide, the net profit before tax, we are adding adjustments for non-cash items. Here we have mentioned the depreciation, dividend payable. So here we are adding back. And about current liabilities, that is provisions for doubtful debts, bills payable, outstanding expenses, sundry creditors. All these are called as current liabilities. The treatment for current liabilities is, if the current liabilities are increasing, then we have to add, and if they are decreasing, then we have to subtract. Let us solve this problem. The solution is in front of you, that is cash flow from operating activities, indirect method as per accounting standard 3, AS3. Net profit before tax, it was mentioned that 1,60,000. Then we have to add adjustments for non-cash items. There were 2 non-cash or non-operating expenses which were provided in the question. That is depreciation and dividend payable. If you go and check, the depreciation for the first year was 1 lakh rupees, but whereas for the year end, it was 1,20,000. Opening balance was 1 lakh, closing balance was 1,20,000. So the difference over here is 20,000. That 20,000 of depreciation is created for that particular year. So that 20,000 we are adding back here. The same is applicable for dividend payable. Even for dividend payable, the opening dividend payable was 0, closing dividend payable was 6,000, which means 6,000 is the non-operating expenses which we have created here. So that we are adding back. So if we check this question again, let us come back to the question again. There is no non-operating incomes over here, so no need to subtract anything out of it. Hence we have just added and we have obtained the operating profit before working capital changes. Now here comes adjustments for changes in current assets and current liabilities. Here we are adding decrease in current asset. Only one current asset is there whose value has been decreased. So we are adding prepaid expense. That is the prepaid expenses whose value is decreased by 2,000. So we are adding back. As well as we are adding the current liabilities whose value are increasing. That is from opening till closing the value has been increased. That is we have created that. There are 2 such current liabilities, that is outstanding expenses as well as provision for doubtful debts. We have added rupees 6,000, 1,000 respectively. So altogether this 2,000 plus 6,000 plus 1,000 will amount to 9,000. That 9,000 is added back to operating profit before working capital changes. That is 1,86,000 plus 9,000. So the total will be 1,95,000. Now here second sort of adjustment is that is subtraction of decrease in current liabilities and increase in current assets. So creditors value has been decreased to 36,000, bills payable value has been decreased to 4,000. Those things we have to subtract. As well as the current assets value for debtors, outstanding income, stock, bills receivable has been increased. So all the increased value has to be subtracted over here. So together the total of decrease in current liabilities and increase in current assets will come up to 75,000. So if we subtract 75,000 from 1,95,000, the answer what we get is cash generated from operations, that is 1,20,000. So from this 1,20,000 we have to subtract income tax paid. Let me make it clear. Provisions for taxation will go into the head adjustments for non-cash or non-operating expenses. Income tax paid will come in this category. So in the question the chances are there that provisions as far as income tax paid will be provided. So in that situations, provisions will be transferred to adjustment for non-cash items. Income tax paid will be coming below cash generated from operations. In this problem, income tax paid is not given, so hence we are leaving it blank. So the answer what we get 1,20,000 is called as net cash flow from operating activities. So this is the solution for operating activities. So this is for 5 marks, as well as when we try to solve 15 marks problem, even in that situation also we have to prepare this operating activities. So now let us go to the investing activities. This is the format for investing activities, that is cash flow from investing activities. Here also we require 2 amount column. Here we consider all the outflow of the funds, that is either from the purchase of machinery, purchase of the goodwill, as well as purchase of the investment. From that we will be subtracting the sale of machine, sale of investment, any activity which has been inflow of the fund, that is the inflow of the cash is. So we do that adjustment, then we call it as net cash flow from investing activities or net cash used in investing activities. If the inflow of the cash is more than outflow of the cash, then it is called as net cash flow from investing activities, that is our sale is more than purchase, then it is called as net cash flow from investing activities. If our purchases are more than our sale, then it is called as net cash used in investing activities. Why? Means I have sold a machinery worth rupees 1 lakh rupees and I have purchased one more machinery worth rupees 2 lakh. In this situation what happens? Sale value is 1 lakh, purchase value is 2 lakh. So in this situation I have used the cash, I have not generated the cash. I have used 1 lakh rupees extra for purchasing new machinery. If the scenario was reverse, I have sold a machinery of rupees 2 lakh and I have purchased one machinery for 1 lakh. In this situation, the answer will be net cash flow from investing activities. That is, I have generated 1 lakh rupees from the investing activities. So let us solve one problem on this. In the following information, we need to calculate cash flow from investing activities. That is, he has given first investment of rupees 8 lakh. Half of investment was sold in 2012 at a profit of 50,000, which means the investment value for that company is 8 lakh rupees. Half of the investment have been sold, which means out of 8 lakh, if you take the half of 8 lakh will be 4 lakhs. It was sold in the year 2012 and the profit has been made at 50,000. So which means 4 lakh rupees investment value plus profit 50,000. The sale of investment is for rupees 4 lakh 50,000. The next purchase of machinery 6 lakh 20,000. So in this situation, the sale has been done for 4 lakh 50,000. The purchase of machinery has been done for 6 lakh 20,000. So let's see one more adjustment as well. That is, interest outstanding in 2011 was 15,000 and in 2012 it is 10,000 rupees. Interest credited in profit and loss account for the year 2012 is 90,000, which means the previous year outstanding interest is 15,000, current year outstanding interest is 10,000, and the interest credit for profit and loss account is 90,000. So we have to prepare one working note here to check how much interest we have received. So we say calculation of interest received in cash. First we consider interest on investments credited in profit and loss account. That is how much interest we have credited to profit and loss account for that particular year. That is 90,000. First we will consider. To that we add opening outstanding interest. The opening outstanding interest is previous year outstanding interest. That is rupees 15,000. To that we subtract closing outstanding interest. The closing outstanding interest that is for current year it is 10,000 rupees. So the answer what we get over is 95,000. If in case this adjustment was not provided and just they have mentioned interest credited in profit and loss account 90,000, so no need to show this working note. That 90,000 will be considered for calculation purpose. If this is the adjustment, then we have to prepare accordingly. That is, first we have to check how much interest has been credited to profit and loss account, then we have to add opening outstanding, then we have to subtract closing outstanding. Then whatever balance is left over, it is called as interest received in cash. Now let us prepare a statement showing cash flow from investing activities. The format is simple, particulars amount. Here first we will consider sale of investment, that is how inflow has been happened. Sale of investment, that is, in the earlier this first point we have discussed that out of 8 lakh, half of the investment has been sold, which means the investment of 4 lakh rupees has been sold. Plus profit has been made, so profit has to be added back. That is 50,000 has to be added back. So total it will come up to 4 lakh 50,000 rupees. Interest on investments, which we have shown on a working note number 1. That is interest received in cash 95,000. That interest on investment we are adding back over 95,000. So together it will come to 5 lakh 45,000. That is the inflow of the fund. Outflow of the cash. How come outflow has been happened? We have purchased the machinery for rupees 6 lakh 20,000. We have to subtract that purchase of machinery is outflow of the cash 6 lakh 20,000. So we are getting an answer of negative 75,000 rupees. So here we call it as net cash used in investing activities. If the answer was positive, that is inflow is more than outflow, then it is called net cash flow from investing activities. But in this problem, inflow of cash is less than outflow of the cash. So hence we call it as net cash used in investing activities. Now third sort of category is there, that is cash flow from financing activities. There is a format in front of us, that is cash flow from financing activities, particulars amount, that is 2 amount columns. The inflow of the cash for financing activities might be issue of equity and preference shares, or issue of long-term borrowings, or issue of debentures. These are the sources from which inflow of the cash can be done in financing activities. What about outflow of the cash in financing activities? That is by repayment of loans. If you have repaid certain long-term loans, then it will come in this category. If you have redeemed the debentures, even in this situation, it will be an outflow of the cash. Redemption of preference shares and buyback of equity shares. Even in this situation, cash will be outflow from the organization. If you have paid interest or dividend, even in this situation, the cash will be flown out of the financing activities. So after adjusting these two adjustments, we will get net cash flow from financing activities. Let us practically solve one problem over here. It is, he has given us a balance sheet over here. In this balance sheet, we have to identify which are the categories which will fall in this. Equity share capital is called it comes under the financing activities. Preference share capital, it comes under financing activities. Long-term loan, it will come into financing activities. Debentures, it will come into financing activities. Premises will go to investing activities. Machinery will go to investing activities. Investment will go to investment activities. Accrued interest will go to other categories. So now if we see this cash flow from financing activities, we have to prepare. If we check equity share capital, opening, there is previous year share capital was 8 lakh, current year share capital is 9 lakh, which means we have issued the equity share capital of 1 lakh rupees. So we have to show it on the inflow side, that is issue of equity shares 1 lakh. Preference shares, earlier we were having 6 lakh preference share capital, but current year we have 5 lakh, which means we have redeemed the preference share capital. So we have to subtract the redemption of preference shares, that is 1 lakh rupees. Long-term loan, previous year we had 8 lakh 50,000, current year we have 7 lakh 50,000, which means we have repaid the long-term loan. So hence 1 lakh rupees is called as repayment of loans. Hence we have shown it on the outflow side, that is less repayment of loans 1 lakh, redemption of preference shares 1 lakh. Debentures, the opening debentures are 3 lakh, the closing debentures are 4 lakh 50,000, which means we have issued the debentures for worth rupees 1 lakh 50,000. So the same we are adding it as inflow of the fund. So if you see this question, there are two types of financing activities from where inflow of the cash has been happened. That is through the issue of equity shares and through issue of debentures. And there are two items from which cash has been outflown from the organization. That is by redeeming the preference shares and by repaying the long-term loan. So after adjusting all these things, the answer what we get is 50,000, which is net cash flow from financing activities. That is inflow of the cash from financing activities is 2,50,000 and outflow of the cash from financing activities is 2 lakh. If we adjust both of these, the value what is remaining is still 50,000 of inflow of the cash. Hence we call it as a net cash flow from financing activities. So this was related to the 5 marks problems. Now if we come for 15 marks problem, here what happens, All these three types of activities, that is operating activities, investing activities and financing activities, all these three will come under only one head, that is called cash flow statement. Now let us solve one problem on that sort of question. The question is in front of you, that is, from the following information prepare cash flow statement. Here we have liabilities as well as assets, as well as we have additional information, that is we have balance sheet and additional information. Here the data is for 2 years, we have to compare it and accordingly we have to categorize it. Now let us first decode this question, to which category we have to transfer it. Equity share capital equity share capital for the previous year is 2 lakh and for current year it is 3 lakh. We call this as an issue of equity share capital, hence it will be transferred to financing activities. It is related to financing activities. 8% redeemable preference share capital. Opening it is 2,50,000, closing it is 2 lakh, which means we have redeemed the preference share capital worth rupees 50,000. So it will go to financing activities. General reserve, earlier we have 40,000, current year we have 70,000, which means there is an transfer to general reserve. This transfer to general reserve, we transfer it to non-cash items in operating activities. Profit and loss account, earlier it was 30,000, current year we have 48,000, which means there is a transfer in profit and loss account. And when we are transferring, when we have incurred profit, if it was a loss, the value would have been decreased. So here this profit and loss account will be transferred to operating activities for the purpose of calculating net profit. We'll see it in the next slide. Proposed dividend, again we will treat it as a current liability. Creditors, bills payable, again these two are also treated as current liability. Provisions for taxation. Let us see if there is any adjustment related to provisions for taxation. Yes, there is an adjustment number 3 saying that 35,000 of income tax was paid during the year. So hence provisions for taxation will be prepared under a separate account called provisions for tax account. If this adjustment was not there, income tax paid adjustment was not given in this problem, then we can treat provisions for taxes and current liability and consider it in operating activities. But when the adjustment is given, then we have to prepare a separate working note for it. So this was related to the liability side. Now let us come to the asset side. Goodwill. Earlier it was 1,15,000 and current year it is 90,000. So it is called as written off. Goodwill has been written off. So this is called as non-operating expenses or non-cash items. So hence we have to send it to operating activities. Land and building. There is an adjustment related to the land and building. That is, they have provided depreciation, and even for plant they have provided adjustment for depreciation. So both of these have to prepare a separate account, and both of these also fall in investing activities. About debtors, stock, bills payable, we consider these three as current asset and these are transferred for operating activities. What about cash in hand and cash at bank? We keep these two as it is at this moment, because when we complete the problem, when we receive either net increase or net decrease in cash, then we have to add the opening balances here. The opening balances are 15,000 of cash in hand and 10,000 of cash at bank. Together it will come to 25,000. When we add this 25,000 to net increase or net decrease in cash, then we have to obtain the value which is equals to your closing cash in hand and cash at bank balance. So the end answer for us this is 18,000 of closing balance of cash. Don't get confused. We'll solve this problem practically, then we will come to know. As of now, this cash in hand and cash at bank will not be included as current assets and transferred to operating activities. Right this moment. Now coming to the additional information, these adjustment, that is depreciation of 10,000 and 20,000 of plant and land and building, first they will be transferred to the respective account, that is land and plant account. Then the second adjustment for second entry for this will be in operating activities, that is under the head non-cash or non-operating expenses. Next, interim dividend paid. Here we are paying interim dividend. This interim dividend first we have to transfer to operating activities under that non-operating expenses. The second entry for this will be in financing activities as an outflow of the cash in the form of dividend. Income tax paid 35,000. First, this 35,000 of income tax paid will be transferred to provisions for tax account. Then, second, in operating activities itself, we subtract this. Let us solve this problem practically. The solution is right in front of you with working notes. As we discussed in this question, there are three working notes which have to be prepared. One is for plant, one is for land and building, another is for provisions for taxation account. So let us prepare this. First, let us prepare plant account. The format is similar: particulars amount, to balance brought down opening balance, by balance carried down closing balance, and the depreciation for plant will be considered on the credit side. That is by depreciation 10,000. So we will make the total, and the balancing figure is coming on the debit side, which means we have purchased the plant. That is an outflow of the cash. The worth of rupees outflow of the cash is 1,30,000 and the plant has been acquired for 1,30,000. So hence balancing figure will come on the debit side. So hence we have given heading as calculation of purchase of plant. In the second working note we are mentioning calculation of sale of land and building, because in this working note we will be able to find out that is land and building has been sold. Let us decode it. The format is again same: to balance brought down and by balance carried down, and the depreciation is provided. The same thing we are adding over here on the credit side by depreciation 20,000. And when we try to balance it out, we see that there is an inflow of the land and building. That is, we are selling the land and building for worth rupees 10,000. So you have written balancing figure in bracket. Now this for plant account, this 1,30,000 will be transferred to investing activities as an outflow of the cash, and for land and building account, that is the sale of 10,000 will be transferred to investing activities as an inflow of the cash. Now third working note, that is calculations of provisions for taxation. That is the problem we have provisions for taxation, so opening and closing balances, as well as we have received income tax paid. So here we need to calculate provisions for tax. So it is very much simple. For the assets, we consider opening balance on two sides. For the liabilities, we consider opening balance on buy side. So buy balance brought down 40,000, to balance carried down 50,000. As we have paid income tax, so it will come on the debit side. To income tax paid 35,000. The balancing figure is 45,000. So it shows provisions what we have created for tax for that particular year is 45,000. The income tax paid and the provisions for taxation, both of these will be transferred to operating activities. Let us check the solution. It is in front of you. The cash flow statement looks accordingly. Here I have made two parts on the screen because it was not able to fit only on one screen, so I am split it into two screens. That is, I have made two tables. When you are solving this problem, you will solve it on a vertical format, that is only in one line, that is on one page. No need to draw two tables. Only in one table we can conclude this. The heading goes as cash flow statement indirect method as per AS3. So the format is particulars amount. One is for inner column, another is for outer column. First let us begin with A heading. A stands for cash flow from operating activities. First we have to consider net profit before tax. That is, from closing profit and loss, if we subtract opening profit and loss, then we will get net profit or net loss. In this situation we are receiving net profit, so hence I have written net profit before tax, that is 18,000. To this we have to add adjustments for non-cash items. As we discussed earlier, there is a transfer of general reserve, there is a provisions for taxation what we have created, there is a goodwill written off, there is a depreciation for plant and depreciation for land and building, as well as we have paid an interim dividend. So these are called as non-cash or non-operating expenses, and hence we are adding back it to the net profit. And there are no non-operating income since we are not subtracting anything out of it. So whatever received over here is called as operating profit before working capital changes. The answer is 1,68,000. So here we have to make an adjustments for changes in current assets and current liabilities. If we check here, we have to add decrease in current assets and increase in current liabilities. There are no current assets whose value has been decreased, so we have kept it blank. And if we check with the current liabilities, we have two current liabilities, that is proposed dividend and creditors, whose value has been increased. So it has increased to 8,000 proposed dividend and 28,000 for creditors. So the same thing has been added back. So 36,000, 28,000 plus 8,000 is 36,000, and 36,000 is added back to the 1,68,000. That is operating profit before working capital changes. So the value what we get over here is 2,04,000. From this 2,04,000, we have to subtract decrease in current liabilities and increase in current assets. We have only one current liabilities whose value has been decreased, that is bills payable of 4,000. As well as for current assets, the value whose value are increased is debtor, stock, and bills receivable. So those things we have to subtract from this. If we see the aggregate, that is the total 4,000 of bills payable, 40,000 of debtors, 32,000 of stock, plus 10,000 of bills receivable. Together it will come to 86,000. So the 86,000 has to be subtracted from 2,04,000. The answer what we get here is 1,18,000. That is called as cash generated from operations. From this cash generated from operations, we have to subtract income tax paid. As I said earlier, provisions will be transferred to adjustment for non-cash items, and income tax paid will be subtracted over here. That is 35,000 is subtracted from 1,18,000. So the answer is positive 83,000. Hence we call it as net cash flow from operating activities. So this was related to the operating activities. The continuation of this will be B heading. I have wrote this net cash flow from operating activities at the end of this line as well as on the top of the second table, just to show you guys it is the continuation. It is not separate two tables, it is only one table. So now A part is complete, that is we have got cash flow from operating activities. Now second activity, that is B activity, that is cash flow from investing activities. That is cash flow from investing activities. Here there were only two adjustments. One is sale of building for 10,000 and there is a purchase of plant of 1,30,000. Both these values have been derived from the working notes. You can check the working notes for these values. If you check over here, the inflow of the cash from sale is only 10,000, but whereas outflow of the cash has been happened because we have purchased a plant for 1,30,000. Inflow is only 10,000, outflow is 1,30,000. The end result for this is outflow of the cash of 1,20,000 in investing activities. Hence we call it as net cash used in investing activities, that is 1,20,000. This was related to the investing activities. Third is cash flow from financing activities. Here we have issue of capital as inflow, that is we have issued our share capital, equity share capital, and we have received the capital, that is 1 lakh rupees. It is called inflow of the cash from financing activities. But there are two such items from where we have outflow of the cash, that is from redemption of preference shares and paying the interim dividend. These are the two items wherein our cash has been outflow. The outflow of amount for redemption of preference shares is 50,000, that is opening preference shares for 2,50,000, closing preference shares is 2 lakhs, so hence 50,000 of share capital of preference share capital has been redeemed, so hence we have to subtract that. Interim dividend has been paid for rupees 20,000, even that has to be subtracted from that 1 lakh rupees. So hence after this 30,000 positive values remaining. So this 30,000 is called as net cash flow from financing activities. So here we have three answers in front of us, that is net cash flow from operating activities 83,000, net cash used in investing activities negative 1,20,000, net cash flow from financing activities 30,000. Now we have to add up these three values, A plus B plus C, that is 83,000 plus minus 1,20,000 plus 30,000. So these three has to be added back. If we add all these three, we receive negative value, that is minus 7,000. This minus 7,000 is called as net decrease in cash. So guys, this is the answer for this cash flow statement. The cash flow statement says that net decrease in cash is 7,000. So the answer for this cash flow statement is net decrease in cash minus 7,000. Just to cross check whether this minus 7,000 is right or wrong, this adjustment is there. For this net decrease in cash, we add opening cash balances, that is cash in hand and cash at bank. We add both these values. Together, cash in hand and cash at bank opening balances will come to 25,000. If we add 25,000 to minus 7,000, the balance remaining is 18,000. This is called as cash at end. Now, if we go to the question, this 18,000, if we go to the question, And if you check cash in hand and cash at a bank closing balances, 10,000 plus 8,000 is called 18,000. So this is the confirmation that what answer we have opted, that is net decrease in cash minus 7,000, is right or wrong. So guys, this is the method to solve this indirect method. 99% indirect method is used. In extreme cases, direct methods are used. So here comes your cash flow statement chapter comes to an end. I request you guys to try to solve all sort of illustration as well as exercise problems which are available in your textbook, and if you have any sort of doubt, please go ahead and ask me at any moment. Don't hesitate to ask the doubt. Thank you everyone.